All right, first up on the show, we want to understand what the outlook is from Fino Payments Bank. They're capitalizing on the Paytm Payment Bank exit, sharpening their focus on digital banking. So here to talk about that and lots more is Mr. Rishi Gupta. He's the MD and CEO at Fino Payments Bank. Thank you so much for joining in. To begin with, there's a huge opportunity now in digital banking after Paytm's Payment Bank exit. So how are you looking to capitalize on it? How are you looking to grow your market share?
As we build up on the B2C business on the UPI and provide B2C UPI service to our customers, Fino has about 1.1 to 1.2 crore customers, and about 40% of they are using UPI service. We also started to build on the UPI digital ecosystem. And unlike some of our other competition like Paytm, we are largely into B2C UPI services, and we are recently only started to build up the QR platform. So our services were more on the banking services for the merchants and the customers on the ground. It's a little different, so to say. The space which has got vacated as such, I think, is largely being on the QR code deployment side. And we have just started to build on that business. On the consumer side, we have a large network of merchants which we are planning to tap to build QR on that platform. We are also trying to build up an offline QR portfolio with some of the players who are already there in the market and putting QR codes on behalf of other agencies as such. So they are looking at as a banking partner for the QR business as well. So our digital journey, which started about 2 years back, has completed quite a milestone in the last 2 years. And we expect that the journey will further strengthen as we offer more digital products to our consumers and to our clients.
And what are your plans to ramp up the digital offerings? How are you looking to grow your digital revenue share?
So digital revenue share, if I look at 22-23 was only very marginal there. In 23-24, we were about 6% of our total revenue was coming from the digital business. Largely, these are B2B digital business, which are profitable as well as gives you a good revenue stream as well. We expect that this 5 to 6% of 23-24 will expand to more than 15% in 24-25, largely on account of the payment services which we have built on the digital platform. We're also trying to bring new services on the payment ecosystem and the digital ecosystem, which are in the process of being rolled out as we speak, and especially products around pay-in, PPI, offline QR. Something which we are expecting that those numbers will start to show in the quarters to come.
What about how many QR codes you currently have? What are the transactions like? How do you plan to scale that up?
So QR codes is recently we started with pilot with about 15 to 20,000 merchants, so to say, and that is on the consumer side, which we have started to build. On the other side, which is the B2B side, we are trying to partner with a couple of players in the market, and hopefully in the next quarter, 1 or 2 sign-ups happen. And then we'll see the big ramp up on the QR side, especially on the offline QR platform.
Sean, given that revenue guidance of over 20% for FY25, what's making you optimistic? What are the levers for growth?
So our physical businesses, we are 3 legs of revenues which was coming in the last couple of years. One was on the transaction business, which has been growing. The secondly on the CASA business, so to say, which is your savings account and current accounts for the customers, and then the CMS business. So we were running on a three legs, so to say, in the last couple of years. In 23-24, we added digital as a fourth leg to our business. I think the substantial growth which we see in the 24-25 year is going to come from the CASA business, which was around 21% for FY 23-24. We expect it to grow to 23-25%. Our CMS business, which was about 9%, we expect it to be around 10%. And our digital business, which was around 6%, as I said, is expected to cross 15%. So all the 3 levers on CASA, CMS, and digital, we should grow in 24-25. Also, we would see a small maybe turnaround on a transaction business as we see stability coming on the transaction business also vis-a-vis last year.
You'd also applied to the RBI to convert to a small finance bank. What is the update on that front?
So we had applied to RBI in December of 23. It's been 6 months. Our application is with them. We should expect to hear from them anytime soon. And till now, there has been no update as such.
And you're considering offering small ticket size merchant loans and products. How will you be looking to expand your product offering? What's the outlook on the change in the customer profile?
So Fino has been, if I look at the lines of businesses, we started as a payments, then we entered the liabilities, and recently we are also started to offering lending or asset portfolio to our customers and merchants. So we are tying up with some good NBFCs, so to say, offering both unsecured and secured portfolio through referral scheme as such. As Payments Bank cannot take any risk on their own balance sheet. So these are largely partnerships which we are building through NBFCs, and we plan to offer it to our customers. We have more than 1.2 crore customers, as well as to our merchants, which are more than 15 lakh. So starting with small ticket loans, then getting into two-wheeler, maybe small affordable housing, gold loan. Gold loan, we already do somewhere around 60 to 80 crores on a referral basis on a monthly portfolio, if I look at. So these are customers for which we have data. Our transition also from a payments bank to an SFB revolves around distribution, data, and digital. So all the three Ds we have completely in place now for us. And with partnerships also coming on the lending side, we should be able to offer this foundation of Payments Bank, which we have built to our lending partners, where small ticket loans and other affordable loan categories can be made available to our customers and merchants. We see a big potential, specifically on the merchant side, where there could be small value working capital limits which could be required, or a small ticket loan for our customers for their housing requirements, or for consumer durables, or for two-wheelers. So we see a good potential over and above our savings account, which we have built with our customers and merchants.
And you're at the forefront of technology. How are you leveraging tech?
See, technology is in the blood of, we actually started as a technology company, then we morphed into services, then we became a payments bank. So technology comes first to us. Nearly 7% to 8% of our workforce is purely technology guys. And technology is the only way we can expand our business. Technology is the biggest expense or investments for us as well. So till about last year or this year also, we were largely working on a outsourced core banking platform. So now we have tied up with Infosys and running a Finacle platform, which should go live anytime end of this year or early next year, where we are now going to host the entire core banking on our platform. Over and above, we are also hollowing the core. We are taking out a lot of services which are there in the core banking platform and bringing it outside the core, so that the scale and the speed which is required for processing transactions. And we do about 1100 to 1200 crores worth of transactions every day. So you imagine that the pressure on the core platforms would be severely high. Just to lighten that core and bring a lot of services outside, we are earmarking on a very ambitious project on the technology side. This would be the biggest project post when we went live. And we expect that with the digital ecosystem which we have built and a technology upgrade, in fact, a new technology and a better technology is going to come within the next 1 year, we should be able to leverage that in a much better way and provide better services and products to our customers. And we are very confident of that. And specifically, the technology is going to be the state of the art and the best in the market.
And, how quickly will you be able to grow? Walk us through the long-term vision, the demand trends.
So our growth has been phenomenal. If you look at the last couple of years, we have been growing at 20% plus. On the revenue side, our transactions have been growing at 40% plus. We expect the momentum to continue with the digital push, which has started to come from last year. We expect that the growth will be more than 20% as such, which will have a bigger and positive impact on the profitability also. So both the engines on revenue and profit should grow in 24-25. And as we move from physical to digital, we are opening up a host of services and products which can also be offered on the digital platform. So that itself was a completely new territory for us, and we have made some good strides and good inroads into that. And we expect that with the kind of technology and services which we are able to offer to our clients and customers, we should definitely benefit on the digital side, and because of which we should see a higher than 20% growth in 24-25 and a positive impact on the profitability. Sustainability is something which we have been always focused on, and Fino became profitable from March of 20. And since then, we have been profitable, and profit has been growing on a year-to-year basis. We expect 24-25 to be a better year on our profit as well as on our revenue.
Quick break. We'll be right back.